Hello, everyone. Welcome to another edition of our More Than Markets series. My name is June Zimmer, Vice President of ESG Advisory at NEI Investments, and I'm really happy to join you here today. Last week, my colleague John Bay discussed how our sub-advisors are positioning funds for market volatility and rising rates. Today, I'd like to go beyond volatility and help you reframe your client conversations to focus on a broader impact of investing. Market volatility is bound to happen for investors, and these ebbs and flows can often cause us to take note and ensure that our money is working for us in the way we intended it to. From an impact perspective, investors are also invited to focus on the broader vision of their investment dollars and hone in on the impact their money is making along the way. So what do I mean by that exactly? Well, investing in ESG funds empowers investors with the opportunity to not only seek financial returns, but also to influence the companies that they invest in along the way. This helps investors focus less on the immediate volatility when it occurs and more on the longer-term impact of their investments. It has been said that you can't change a company you don't have a stake in. And through corporate engagement, investors can contribute to positive change in the world and grow their portfolios at the same time. With a strong commitment to financial performance and rigorous ESG practices, including corporate engagement, Canadian investors can make an impact beyond returns with their portfolios. Our goal is to protect shareholder value while influencing accountability to all stakeholders. We believe the most effective tool for achieving that goal is corporate engagement. We talk directly with companies, alerting them to ESG risks, encouraging them to improve their ESG performance, and we also influence how these companies are run through our proxy voting, corporate dialogue, and shareholder proposal work, all part of our engagement program. The NEI approach to corporate engagement is a proprietary model that incorporates internationally recognized principles and frameworks, such as the Principles for Responsible Investment, the UN Guiding Principles for Business and Human Rights, the OECD guidelines, and the UN Sustainable Development Goals. Today, I want to showcase a couple of examples of this engagement work in action, really to demonstrate the impact that we are making and to show how this ties into economic growth along the way. So as many of you know, Johnson & Johnson has been a key contributor in vaccine delivery through the pandemic. Yet as a company, they have been working through some vaccine distribution challenges. They've been struggling to meet their COVID-19 vaccine distribution commitments for low and middle income countries. But it looks like they may be overcoming some of these supply chain hurdles for a more promising result in 2022. We at NEI met with Johnson & Johnson twice in Q4 of last year. Once to lead an investor group dialogue through the Access to Medicine Foundation, and then again as participants along with other members of the ICCR. We discussed distribution challenges and access more broadly. In Q1 of 2022, Johnson & Johnson does expect to provide more vaccines to the group COVID-19 Vaccines Global Access, more commonly known as COVAX, and to the African Union. We will be following up with Johnson & Johnson, along with other vaccine makers in 2022, to check that they continue to make progress in making COVID-19 vaccines more accessible, recognizing that there are still many links in the supply chain for effective distribution. This is a great example of how vaccine access can impact economic growth. We've seen emerging markets struggle for growth because of challenging economic cycles. When countries have access to the vaccine, it helps the global economy. Another example of a company we've engaged with is Verizon. As a telecom company, they have played a key role in providing digital access and also informing digital rights through the pandemic. Verizon demonstrates human rights leadership by putting ample resources towards managing human rights concerns, really setting them apart from the telecommunications peers. We led a meeting between the company and investors in October, following the signing of the Investor Statement on Corporate Accountability for Digital Rights. This conversation touched on freedom of expression, privacy, and other human rights related topics. Verizon has a team dedicated to integrating human rights solutions, including human rights due diligence, throughout the business, which does demonstrate a deep level of commitment, and they do a very good job disclosing these efforts. They acknowledge that they can disclose more about their approach to data breaches and how they ensure their third-party partners are upholding Verizon's standards. These are two areas we expect to follow up with them on in the future as well. Both of these examples showcase the impact of our engagement with companies we invest in, but they also demonstrate our commitment to protecting shareholder value while influencing accountability to all stakeholders. It also makes good economic sense. I want to thank you for tuning in today. I hope you found today's insights helpful. Please do watch out for next week's edition of our More Than Market series. And as always, reach out to your NEI partner with any questions. Thank you, everybody, and stay safe.